Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 13th of August, 2022, and it's the weekly technical analysis for spot gold and dollar yen for the third week of August. And let's begin with spot gold, where we see on Friday it has a strong bullish close right into the resistance zone at 1800 round figure. It did spike through it earlier on Wednesday with the release of the US CPI data, but then it pulled back lower and until it retested the breakout zone of this resistance just above the 55th and the 1780 round figure, and finding support and pushing up higher for a strong bullish close on the Friday. Let's also take a look on the weekly time frame, and also a bullish candle here, bullish candle close, and looks like it has crept back up above this previous trend line of the triangle, lower trend line here. So let's see whether this week it's able to sustain and continue its bullish momentum into the daily 200 EMA. And looks like for now, the 1780 is looking like it's interim support area. Okay, so let's mark this now at the 55th as support. And we'll mark it as interim support here. Key support is going to be slightly lower at the 1750. And of course the 1700 as well. So this area at the 62.5 and the confluence with this 1800, that's going to be the critical resistance now. And above that, that's going to be the key resistance. All right. And let's just make this change in color to try to make this clearer. So with Wednesday's CPI data, which was slightly lower than expected, even though inflation is still high, but the this could sway the Fed's decision to accelerate the rate hikes. To they have to consider now whether to maintain at the 75 basis points or slightly lower, but at least the 1 percentage point increase is off the table for now. So because of this slowing down in inflation, but although it's only just one data point, stock market has also gapped up higher, and with that there's a follow through in the recovery. So let's see whether spot gold is also taking advantage of that at expense of the US dollar, which we'll look at soon. But yes, let's switch over to the 4-hour time frame, and yeah, that was the spike through on a Wednesday, pull back, and that was the support that it managed to find after breaking out higher. So pull back to retest that and then climb back up on the Friday. Okay. So let's compare with the US dollar index, the DXY, to see how that performed. It's a US dollar most likely would have pulled back even lower in inverse correlation with spot gold and the other major pairs as well. Okay, let's switch over and take a look at the DXY. And here's the DXY, where you can see the breakdown from the channel, from the bullish channel, and where it already crossed over on the Tuesday, and then the big fall on the Wednesday with the CPI data. And finding support, and Thursday was consolidation until Friday. It managed to climb back up to the 62 FIB retracement after dipping below the 78.6 retracement level here. So it has found support. That's the previous trend line, upper trend line of this triangle, and the round figure of the 105. So although it did come close to the 104 area. So we'll see if this week is able to recover from the 105 and climb back up above 106 and eventually back to the 107 resistance zone. And whether this is going to be a bottom for now after this run up over the past couple of months, and almost a significant retracement back to the 78.6 of this breakout from the 105. So it has come back down to retrace that whole move, and we'll see now whether it's able to recover some of that move, probably back to the 107 area. Expand this slightly. So this has to hold as, continue to hold as support. That's a major area of support here now. And let's extend this trend line lower. $107 will be the still a significant resistance. Okay, let's take a look on the weekly time frame, and that was the dip below with a very close, about half of the range. So that could be some consolidation, and for another week before it attempts to climb up higher above 106. Let's also take a look on the 4-hour time frame. And that was the breakdown on the Wednesday. The US CPI data, which was slightly lower than expected. And then from the double bottom, it has managed to find support and climb back up on the Friday. So on the 4-hour time frame, it needs to break above this area now with the 55 and the 200, providing interim resistance. So this could actually be a significant resistance now at the 107. Okay. So this week there's a couple of US news, but nothing major, with some retail sales and Philly Fed manufacturing index midweek. So we'll see whether there's any impact from that. All right. Let's also just redraw this slightly, adjust this a bit. And we'll see if it's going to come back to retest 50 fib and the lower trend line of this bullish channel. Okay. So let's move back to the other major pairs. Let's move on to the US dollar against the Japanese yen. And on Wednesday, you can see that sharp fall for the yen. And that's the impact of the US CPI data. And attempted to dip lower the next day on Thursday as well with the PPI data. But managed to bounce back up and avoid the 62 fib support area and climb back up above the 50 fib and the 133 level on the Friday. But there's some interruption here with the daily 55 EMA. So we'll see if it's able to break through that and continue higher on next week. So let's take a look on the weekly time frame. And it's a higher low, and we'll see if it's able to recover from there, even though it's a bearish close for the week and about half of the range. So there's some pullback higher, back above the 50 fib here. Could be consolidation, and the 135 is definitely going to be strong resistance. So we'll see whether it's able to break through that this week, or maybe perhaps next week if it's going to continue to recover. So key resistance is still going to be at the 137 and the 21 fib retracement. Support is at the 62 fib retracement and the 131 round figure. Let's also bring down an interim resistance here at the 135. Oh, yeah, here it is. Let's take this one out then. Okay. So this week there's the retail sales figures and as well as the Philly Fed manufacturing index on Thursday. We'll see whether there's any opportunity for a trigger to boost the US dollar. And whether there's going to be some consolidation next week. Looks like there's going to be possible consolidation until the week after. Okay. Let's also take a peek at the 4-hour time frame. And that was a significant fall on Wednesday with the CPI data. That's a 100 pip move, and then further continuation into, oh, excuse me, that's a 200 pip move from the 135 to the 133. That's within that 4-hour time frame, and then follow on the next 4 hours into almost 300 pips fall there. So that was a significant impact on the dollar yen. And as well as the yen cross pairs. Okay, so there's some work for the yen to recover. Let's see how much it can recover for next week, because it needs to recover back into where it started from this fall at the 135. Okay, so do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.